Hello traders, welcome to another edition of Stray Dogs weekly video. In this video I will go through DAX and S&P daily charts, compare DAX with the S&P, show a bit of other US indices as well, and let's start this video with the DAX index daily chart. What we can observe on this chart is that on Friday market closed above daily 20, which is the midpoint of the Bollinger Band, above Thursday low and above midpoint of the range. So we are trading on DAX in well-defined range. Range is defined on the upside with a double top at the all-time high, and on the downside here on this support area, which is above this gap here. So inside the range we already had several moves up and down, up and down, up and now to the downside. And it is important to understand how we got here to this point in time, and what happened before, and how those large time frame charts are important for context and to understand from which side the wind is blowing when we are trading short term. Now, here in this folder I have screenshots from Setups Gallery, the end screenshots of each day, starting with Monday of the previous week. So let's watch these 2 weeks and how this price action was going. So market was in range despite 3 trend down days, which is very important. So they were still holding support. So still this is the same case like 2 weeks ago. No downside follow through below support, and as long as above this support, the large time frame bias is going to be neutral on DAX. Now, a trend down day and close on a daily 20, downside continuation on previous Tuesday, and I think this is one of the key dates in previous 2 weeks, because on this day market just tagged the support area. Again, no downside follow through, still above support. US CPI was an inside day, closed around daily 20. It was followed by yet another smaller day, again closed below the daily 20. And now when you have this situation that after expansion market serves as consolidation and contraction, that is just a prep for directional move. Now from this point in time, you cannot know on Friday, is it going to be expansion to the downside and breakdown of support, or to the upside. However, we got the one to the upside, close well above daily 20, close also above the February high, and this gave context to favor buyers into next days, because we got a few scenarios, and one of those was up move into the all-time high if market holds support. Market held support, broke above daily 20. At the end it went higher. On Monday we had a upside continuation and confirmation that market is working on a scenario which could lead to the all-time high. This is futures side by side with index side by side with futures. Then on Tuesday we had gap up and go, but go where? Just to the all-time high, and also upper end of the Bollinger Band were hit. So new all-time high on absolute basis, but just for 0.14 points. Now about this, you will see on social media sometimes people are saying breakaway gap. This in this case was not a breakaway gap, because market was still in a range. Breakaway or breakdown gaps, breakaway to the downside, those gaps are when market breaks a range. This market was still in a range, and basically this we could say like exhaustion, more like exhaustion gap right into the all-time high. And this here, how they made double top at the all-time high now served as another point and potential scenarios of that if market doesn't break higher on Wednesday, on next day, that we could have double top behind our back. Now on Wednesday we had again smaller day a regular trading hour session between two untested closes, which is another confirmation why we are, why we are marking untested closes on our charts and why we are watching gaps. And the market finally showed some features of efficient market by closing that gap from the previous day. But we still, behind our back, we have just in the recent period 5 untested, unfilled gaps. This was the 6th one, and market immediately closed it. Then on a Thursday we got a downside continuation, and market broke our important support zone and went down just to daily 20, coming to Friday when we have this. Now, that's the history lesson how market came to here and how we had scenarios of market going higher into the all-time high, which happened, and then from their scenario that what if we do have actually double top behind our back, and then market went down. Now about this, which you can see on this screenshot. So once again, close is above daily 20, above Friday, above Thursday low, and above the midpoint. Now this lower eye was on the range midpoint and on the previous day low. Then Friday low was made at 22,723.19, while when we make a Fibonacci, when we make a fib on this move from the low up to the all-time high, and these here are to the point, to the decimal, you see what the Friday low was. This. So this is 723.47, while this is 723.19. This is not a coincidence. Not a coincidence. It's just less than 0.3 points on this kind of move of like 1,200 points. It's just a confirmation how important it is to use fib retracements and to know where the halfback is, which is not a Fibonacci number. Halfback is just the midpoint, a middle of range, but it is often very well respected by the markets, both on small time frames and on large time frames. And on large time frames, 61.8 especially useful, which I'm going to show you on other indices as well. Now, when we compare this chart with the S&P, this is the chart with many stuff going on here, and I will compare much cleaner charts in a minute. Here there are 2 potential scenarios on a bounce, and you see how they used for the low previous level on 5,505, while on the upside, in my opinion, still the most important levels would be 5,700 and this area around 5,770. Now let's compare these 2 charts on much cleaner ones, 2 indices. This is DAX and this is the range that we are trading, while this is S&P, and this is a previous week on the S&P. As we can see, this is a consolidation and a range, pretty clean as well, since the upper end of a range was just pokes above 5,700. And in the previous weekly video I said that if we get the up move, then we should watch those previous swing lows. This one was from November and it is tagged. This one is from January. What is also important here to understand that is that to actually test that January low, a market needs to deal here with daily 200 and daily 20. The difference between S&P and DAX is very obvious. You cannot even see where daily 200 is on DAX. I need to leave the chart. Here it is. While on the S&P is here, and S&P is below daily 50, while DAX is above the daily 50. What we can also observe here is how stretchy thin a Bollinger can be when momentum is strong, which was on DAX on the upside. Here, how market can glide to the upper end of the Bollinger Band, but when market is weak, it can do the same and for much more days on the downside. Now, I think that scenarios for the next week are pretty simple. I think that we have enough of evidence to suspect a bounce, but there must be some clear invalidation points. For example, for DAX, Friday low is invalidation point, and closing below daily 20 and Friday low will invalidate a idea that there could be a bounce. Why there could be a bounce? Because DAX hit 61.8, also closed above the midpoint, closed above daily 20, and closed above Thursday low. So there could be some bounce there, but the invalidation point must be here, below Friday low. So close below Friday low and below the daily 20 can invalidate that kind of idea. While on S&P, this is a range, so we should apply simple balance rules here by Jim Dalton, and he often says go with the break, like go with the real break, because what can happen with the balance? Price can look above and follow through, and look below and make a breakdown, or price could make look above and fail back inside the range. So like this, they are going, for example, higher, but just over the daily 200, going down into the range, and guess what? All the way down to the lower end of the range, or maybe even here to this point. So these are short-term scenarios. I'm only speaking about the next week. What can happen on the upside? We could get the move like look below this balance, back into the balance and up, or look below, pull back to the lower end of the balance and down. So either we are going to get real or false breaks of the edges of this balance. Again, very well developed range. Now let's move to higher time frames and also observe all of these indices on weekly chart. This is DAX, while this is S&P. This is pretty much the same period, and this is the chart that I showed you on a previous weekly video. We already had this bounce from 61.8. The fib was made from August low, and I will show you how August low is very important on all four major US indices. Why I'm making fib from August low? Because August low is a very prominent low on those indices. As we can see here, market was in a upsloping channel for some time, and the lower end here of a channel was August low. On Nasdaq is pretty much the same situation. Fib made from August low up to the all-time high. We also got a bounce from 61.8. Poke below, but then they regained 61.8. The thing to note here would be this upsloping trend line, which goes down all the way to October 2022, a longer one than on S&P, and how market is still hanging there below that trend line and inside a 2-week range. So on Nasdaq, I would observe this 2-week range as something important, with the same scenarios like on the S&P, real or false breaks of this range as trading setups. Moving to Dow, this is also August 2024, and if I make a fib like on S&P and like on Nasdaq, you would get the same thing like Nasdaq did. It poked a bit below 61.8, then regained, but I think on Dow it is much more important to observe this level 41,860, which was support here for many weeks. Then price broke down and they closed above on Friday. What's going to be here? What kind of price action? Are they going back inside this big wide range, or they are going to roll down? And in case of rolling down, they could test again this low. What happens there? Finally, going to Russell, which is the weakest index of these major US indices, and here is that August 2024 low. Russell, as the weakest one, actually made a complete 100% reversal, and not only that, it made a spring below. So, long story short, on US indices, we have those 2 weeks or 1 week ranges. I would watch 2 week range on S&P and 1 week range on 2 week range, I'm sorry, on Nasdaq, and 1 week range on the S&P for clues. And for DAX, I would watch Monday, and especially Monday and Tuesday, because we are still in the OPEX period, and this was a big, so-called big OPEX or quadruple or triple witching. I think it is now it should be triple witching and not quadruple witching. Quadruple witching doesn't exist anymore, so triple witching on Friday with futures rollover. It is on a DAX especially a very important period. I calculated 5-day period from Wednesday, Thursday, OPEX Friday, Monday, next Monday, and next Tuesday. So can this be, which market made on a Friday, some kind of, in this case, intra week low, which is important because market is still in a range. I can't really call this a potential swing low. We shall see what's going to happen. But again, if market close below daily 20 and below Friday low, it invalidates the scenario of bounce. What the buyers need to see here is at least holding for now above daily 20, but also it would be beneficial for the buy side to close above Friday high. That could squeeze some of the sellers who sold here on a not so hot location, because you know middle should be a target for the sellers selling from above, and then to see what are they going to do with the runner, and to observe this price section. Because when we go down to smaller time frames, this Thursday and Friday, this is futures on a 40-minute chart, you see how here we had bullish divergence. So bullish divergence was on intraday lows on Friday, but it was also between Thursday low and Friday low. So there are enough of components that we could suspect some bounce, but now market needs to hold above the invalidation point of such an idea and actually push higher. So that would be it in this edition of weekly bigger picture videos. I hope you got some good trades this week, and as always, I wish you a pleasant weekend and good trading.